Hey everyone, I want to go ahead and do a video on the SPY. A lot of things happening now. In March of this year, 2015, I put out a video showing a technical signal that indicated that the market would correct or crash in a significant way this year. Made several observations as to the time frame and also things to look for. And some of that started happening late last week on Thursday and Friday. We had a break of the key 204 level on SPY, and we closed up slightly below the other key level of 197, all pretty much in 1 or 2 days. So let's go ahead and review quickly the bearish signal, and that was this divergence in the stochastics and the highs made by the market, the SPY. We had a high in this area, or a little bit here, if you count the flash spike up, and then we had a new high here, but we had a divergence in the stochastics. It had a high hump here, but a lower hump here, and that signal seen in individual stocks and in indexes in the past was an indication that the market would experience a significant pullback. And so we've started that pullback last week. Many people are wondering what are the support levels and the magnitude of this pullback. And so I wanted to answer that particular question. The truth of the matter is nobody really knows how far this thing will pull back, mostly because we don't have, from a technical perspective, we don't have any patterns here with measured moves at least on the weekly chart here. So we can look at different types of information to see where we might end up being, but we don't really know the magnitude of this pullback. Now, given the strength of the sell-off on Thursday, Friday, and overnight here, it looks like it'll be a significant correction or even a crash. So let's go ahead and take a look at some levels and figure out, try and put some anchors in our mind where things might happen. And that's what technical analysis is signals that things might happen. So let's go ahead and do the simplest thing possible and just say, hey, we're going to have a 10% correction. So measured from the top here, a 10% correction, as indicated by this line, will bring us back to the 192.31 level. If we say, hey, we're going to enter into a bear market and get a full 20% correction, we'll be in the 170.50 area. So that's the basic thing you can do, is just say, hey, percentage correction. This is what is termed a bear market. So let's go ahead and do 20% off the top. We can also take a look at resistance and support from the chart. We see here the 204, which been holding for several months, finally has broken and took the 198 level along with it. So there's some other levels we can take a look at here. This point here was a consolidation period and then a breakout at this level. This old resistance becomes support, which is at 189.50. Now this is about an 11.3% pullback. So I'd say, hey, this 10%, 11% correction is in the same area. Here we have a 15% correction at 181.05. And so this is an area that we might want to pay more attention to, because this was near where the October 2014 pullback was. That was a pretty volatile month, but it bounced here and went right straight back up. So that's an important level to look at. And here's another point, swing low here at 173.61. That would be an 18% pullback. And again, if it's 18%, hey, why not shoot for the full 20% pullback? So I'd ignore this level. I'd look at 170.50, 192.31, and possibly 181.05. So looking at the weekly chart, those are the levels I would be looking at as key reversal areas. If you can go ahead and load up your charts, you probably want to draw these lines, set alerts on them, put notes on them that these are interesting areas. But let's go ahead and take a look at the monthly view. If you can see here on the monthly view of the market, we had the dot-com bust in this area. We had the 2008 financial crisis in this area. This formed two double tops in the market. And we had a nice breakout of this double top in 2013. And if you've watched my previous videos, you know that anytime there's a breakout or a breakdown of a support or resistance level, most likely we'll come back and revisit the levels. And so, and we would revisit it on different time frames, in the hourly, in the weekly, in the daily, and in the monthly. We haven't had a monthly retracement of this breakout. And it might be that we get back into this level 157, and that would be a 26% correction. If you can look at this candle here, we probably had either a weekly or a daily retest of this line, but we have not had a longer period time frame retest of this breakout point. This is where I'm putting my bet that we would pull back to 157 and get a 26% correction. Do I believe that we can do a 50% correction? Anything's possible in the market, and I'm open to that idea, although I'm putting my bets on this 26% correction because it just makes sense. And if we look at the Fibonacci level, we can go ahead and let's see here. The more points of interest signals we have, more interesting an area becomes. So if we go ahead and take a look at this, put in a Fibonacci level, you can see that 157 becomes pairs up nicely with the 61% retracement on the Fibonacci levels. So this is the area that I am putting my bet on in terms of how far this market could possibly correct. But again, once you have an idea in your mind, you have to remain flexible and actually see what's happening to kind of get a sense of the market. But this is definitely the area I would be looking at. I want to go ahead and take a look at another important concept. I know a lot of you are thinking, oh my God, I need to short the market immediately tomorrow on the open. So I want to go ahead and look at, historically, when a market crashes, what actually happens. If many of you know, I like the simple phrases, higher highs and higher lows when we're in a bull market, and lower lows and lower highs when we're in a bear market. This simple phrase, when you keep it in your mind on any time frame levels, will help improve your trading, because that's a definition of a trend. So let's go ahead and take a look at the last two previous crashes in 2008 and 2000, and see if we can make any observations that will help you in your trading. We had here in 2008 the similar consolidation period of 8 to 9 months, and finally a breakdown of this consolidation period here in January 2008. Now, what you want to notice here is that we made a lower low. We went ahead and made a high, a lower high, and then we went and broke down and made a lower low again. So what I'm going to do is very simple. I'm going to count how many lower lows did the market make before we saw a true bottom. So we're going to go ahead and take a look at this one. First low, we made a second low, a third low, and then a fourth low. So if this is truly a bear market, we're going to have at least 4 lows, okay, based on this particular incident, okay, this crash in 2008. Go ahead. Oh, and I wanted to see how long does it take to reach the bottom. So I measured it out. From the week that it breaks support to the week that I think would be a reasonable resumption of the or a break of the downtrend would be this week here, where we are making officially a higher high. So if we take a look at that and measure it out, it's 553 days or 1.5 years. So there's plenty of time to go ahead and short this market. Now, of course, the earlier we are getting into the short, then the more profit we're going to have. You definitely don't want to be shorting here. People ask me all the time when a stock drops like 30%, hey, is it too late to short? You know what? Probably is. It really probably is too late to short. You want to be shorting up here. It's hard to short here. You don't know this is the ultimate top, but here, it's we've got a problem here. And you want to look for shorting opportunities. Let's go back to 2000 and do the same thing. We had a similar pattern of consolidation and a breakdown in this area. And you got one low, two lows, three lows, and finally a fourth low. This looks like a double bottom. If you look at this candle, the low is 77.07 and the low here on this candle is 77.68. So not much of a lower low, but still technically a lower low. So we had 4 lower lows in this market crash from the .com 2000 bust. And then we measured out here around this area in May of 2003 when a new bull market could be confirmed. And if we measure it out, was roughly, let me say here, about 910 days, roughly about 2.5 years for this to finally shake out and start a new bull market. So when you look in the past, you're going to understand the present. So we are way up here. We should be looking for shorting opportunities, but at the same time, we realize that this can take a long time. So if you're going to buy puts at the 157 level for the next 2 weeks, those will probably be worthless. If you're buying the dips thinking, oh my god, this is such a great deal, just keep in mind it's going to be a greater deal, a better deal a year and a half from now. It's going to be a better deal when it's 2.5 years from now. In that kind of time frame, you're going to get new leadership in stocks. Different industries, different innovations will happen that'll bring new companies and new leadership into the market. And what is hot now might not be hot in a year and a half or 2 years. Things change rapidly in these kinds of innovative industries. Finally, I'm going to go ahead and take a look at IWM. This is the small cap index, and we see here that it had a head and shoulder pattern and a breakdown of that shoulder, the pattern. And when we have a head and shoulder, we can do a measured move, which might give a better clue as to where the first low or the first bottom might be. And if we go ahead and take a look at the measured move, the IWM probably will head to 111.26, and from Friday's closing, that is a mere 3% from Friday's close. So given the futures are sharply down overnight, we'll probably hit this level tomorrow. And we'll see what happens here. We might get a rally back up, or we might continue to go lower. I just realized that I may have caused some confusion. So I'm going to go back and go ahead and recap here and hopefully clarify what I think might be a confusion. First of all, this ultra bearish signal usually signals a 40 to 50% drop in a stock or an index. We've seen that several times in the past. The other pattern that I talked about in my videos was the market having a 5 to 6 year bull market followed by 8 to 9 months of consolidation. And what usually happens after is that you get a 50+% pullback. And so based on that, I was discussing the lower lows, having 4 lower lows in each time. And I also mentioned that I believe probably that we would have actually a 26% correction. That is just my opinion. The charts or the precedents indicate a 50% pullback. So if we had a 26% correction, we may not have as many lower lows. But what I wanted to emphasize was that the market does not go straight down. It makes a low, it rallies, it pulls back. This is the key part. When it pulls back, does it make a lower low, or does it pull back a little bit and make a higher high? And that is when you can decide that the trend has changed again. If you can see here, this is a lower low, lower high, lower high. I guess this could be a high. This is the high, and then the change here. Same thing here. We have lower high, lower high, lower high or equal highs, a lower high, slightly lower high, slightly lower low, before we finally get a breakout into a different trend. So keep that in mind until you can see, at least on the weekly chart, a higher high, and holding that higher high, then you can consider the correction or the pullback perhaps is done. So when someone says, hey, we're going to have a 20% correction, they don't know. We don't know. Nobody knows. Maybe the richest fund might know because they have enough buying power. But the rest of us, really, we don't know. We can only look at what's happening on a chart and figure out, are we done yet? And usually the magnitude is 50%. I'm guessing 26%, but we'll have to let the chart and the market play itself out and make our observations. So that's it. If you like this video, click on the like button below the video, or if you'd like to subscribe to my channel, click on the subscribe button below the video. Thanks for watching.